One thing many business owners do not think enough about is what happens after the sale. Because during the process, most attention goes to valuation, negotiations, diligence, and closing. And of course, those things matter. But for many sellers, the real reflection begins after the deal is done. That is when regret can start to surface. Not always because selling was the wrong decision, but because certain parts of the process, structure, timing, or preparation, were not handled as well as they could have been. One common regret is selling too late. Some owners wait until growth slows, energy drops, or market conditions become less favorable. And after closing, they realize the business may have commanded more value earlier. Another regret is focusing too much on headline price. A number may have looked strong on paper, but if the structure included heavy earnouts, seller financing, working capital adjustments, or weaker protections, the real outcome may have felt less satisfying than expected. Some sellers regret not preparing earlier. They look back and realize that cleaner financials, reduced owner dependence, stronger management depth, or better process control could have increased both value and buyer confidence. There is also regret around buyer selection. Sometimes the seller chose the most familiar or most likable buyer, not the best qualified or most reliable one. And later they realize certainty and fit mattered more than comfort. Another major regret is emotional decision-making. Some owners pushed too hard on small points, reacted defensively in diligence, delayed decisions, or let ego shape the process. After closing, they realize those moments may have weakened leverage or damaged terms. Some sellers also underestimate the emotional side of life after the transaction. They prepare financially, but not personally. And once the business is gone, they feel the loss of routine, identity, control, or purpose more than expected. That can create a different kind of regret. And then there's the regret of not having stronger representation. Because once the process is over, many sellers can clearly see where value leaked out in structure, preparation, negotiation, timing, or buyer management. The core lesson is simple. Most seller regrets are not caused by one dramatic mistake. They come from small decisions that seemed manageable in the moment, but mattered more over the full life of the deal. That's why selling well requires more than getting to closing. It requires thinking beyond closing, because the best transaction is not just one that gets done, it's one the seller can still feel good about after it's done. EIN Business Brokers. We represent you in business sales and acquisitions. Confidential, structured, executed.